Good morning to all of you, and thanks to the entire WRC Management Committee, especially my very close friend Ketan Seya. He doesn't say it in open forum, but he is a very good speaker. In fact, nowadays he doesn't speak because he is a chairman. Otherwise, we should have been blessed with his speaks also. As far as today's topic is concerned, I know that multiple standards on auditing are kind of squeezed actually. But at the same time, what we will try to do is that I will spend more time in SA 200, which is the basis of or the premise of all the standards on auditing. Rest of the standards, I have a detailed presentation. Maybe I will touch base on particular slides, more particularly from practical point of view, because theoretical part, all of us are pretty well aware about that. And as far as standards on auditing programs are concerned, many a times, the programs are attended for the mandatory part, but I presume that that is not your intention. And second very important thing is that as far as any standards on auditing is seen by any of the chartered accountant, typically we are always there to, we always adopt those standards. It's not that we are not following the standards. Only thing is that many a times we keep on missing on certain important aspects which are given in the standard. So it's not that the standards were unknown to us, even during the articleship time also, we are doing the audit in the same fashion. What we were really lagging behind, or even today, where typically CS lag behind is from the documentation point of view. Many a times we fail to prove that we are following the standards on auditing, and that's where the lacuna is. Otherwise, even if you read maybe index of standards on auditing also, any CA can stand up and talk at least for 5 minutes on each standard. So there is nothing new as such which I am going to talk. I will try to touch upon those aspects which are technically vital, and maybe refresh the auditing aspect, because many a times we are running against the time which is available to us. The recent extension was the classic example of that, and a very unfortunate part about that is, as a CA, we consistently fail to say no to our clients. And I know that this is not a dais to talk about that, but there is one interesting thing about that. Everyone is asking for extension of date for filing of returns of non-audit corporate clients, wherein the last date is 30th September. So ideally, everyone should have signed off those balance sheet. And once you are technically signing off the balance sheet on 30th September, I don't think that there was any extension which was really required. So on one side, we keep on saying that the extension is required. On the other side, everyone presumes that the audit is already over on 30th September. And lesser said is better for 60 days gap to take that UDI. I will not get into that, but I just thought that to highlight certain points about certain things wherein we conveniently say that we are following the standards on auditing. We say that we have concluded the audit on 30th September or 29th September, but there are multiple emails which are lying in our inbox and send box, which talk something else. So be little caution about that when we perform any audit function, whether it be it is a statutory audit, whether it is a LLP audit, or whether it is in the form of a tax audit. So let's start with the first part, standard disclaimer, that all the views which I am going to express, or rather which I already expressed, are my personal views and not from institute side, because the disclaimer is very important when we talk about such controversial things. And especially with social media, which is very active, one has to be very careful. Now, as far as standards on auditing is concerned, first let me give a little background about standards on auditing and what really constitutes standards on auditing. So first part is about the standards on quality SQC and SQMA model, which will soon replace that. Then we have standards on auditing, typically called as SAs as a short form. Then we have standards on review engagement, that is SREs. Then we have standards on assurance engagement, that is SAEs, and then we have standards on related services, that is SRS. Technically speaking, when we use this word as standard on auditing, rest of the things like SRE, SAEs, and SRS are not technically covered as standards on auditing. Those are not standards on auditing. So if someone is doing SRE or SAE engagement, per se they are not required to comply the standards on auditing in a way, because those are not really standards on auditing. There are different regimes for that. As far as certain training material is concerned, there is a book which is published by ICA. I don't know how many of you are having copies of that. It's already available in PDF form also. It's a very good training material. If you happen to give training to your office staff or keep it handy for your office staff, it's excellent material. It has comprehensive commentary as well as the PPT slides which are given in this book. You can make use of that also, especially to train yourself and also to your staff. Just one question before we progress further. In how many of our firms we really conduct the audit training programs on standards on auditing? No? Okay, then let me ask you the other question. How many of you really do the audit? No, signing is not, that is the last stage actually. Yeah, then both the answers actually raises many questions actually. First thing is that when you are a signing partner or an engagement partner, I should say, you need to ask yourself as to whether you are only doing the entire process. Maybe for a smaller audit it's practically possible, but for a bigger audit it's practically not possible that the partner keeps on saying that I only audited everything. It's going to be very difficult to prove that you audited certain things beyond a point. So because all of us are human beings, so we cannot really claim certain things that we are only doing all the things. So be little aware about ensuring that you are training your office staff also. They are at least aware about which kind of standards on auditing are there, so that they can refer that as and when the need arises. As far as the hierarchy is concerned, when you follow certain compliances, the first and foremost is that you need to be well aware about the Chartered Accountant Act 1949. You need to be aware about Code of Ethics and other relevant pronouncements which are done by ICAI. Next one is SQC, which you need to be compliant about. And then the next one is the assurance services and related services, which you really deliver to your clients. Now, when you see this, path, I will just divide that the assurance services and the other services. So, if you look at, the audits and review of historical information, certain set of standards are followed. So, typically when you are giving, performing the services of audit and review of historical statement, what you follow is essays which are ranging from 100 to 999 related to statutory audit. If you are going for a quarterly review, you typically follow the SRE series, that is 2000 series. As far as assurance engagements which are concerned, which are other than audits and other than review of historical information, typically say if you are certifying or if you are attesting prospective financial information. Just to give a simple example, like say if you are submitting a CMA report to the bank, a financial projection is submitted, maybe few of you might be contributing to the TEV study. In those cases, the SAE series will be there, that is 3000 series has to be followed. And as far as statements on the related services are concerned, that is SRS are concerned, these are typically agreed upon procedures. Just to give a simple example, like suppose there is a client who is asking you to draw the balance sheet based on his trial balance. It can be an agreed upon procedure. That can never be called as a attesting a historical statement data or a historical data. So whenever you perform any function, first ask yourself as to what kind of services you are going to perform. Whether it is really a audit service, or whether it is really a agreed upon procedure, or whether it is a prospective information which you are going to certify or you are going to sign off. Based on that, you need to select the standard which applies to your assignment and limit yourself only to that procedure. Let me give you a simple example. For example, many times the banks are asking the clients to have a CA certified, say ITR returns. It's a very common scenario that for borrowers the banks are asking that. Technically you cannot certify that. The reason being, you cannot certify someone else's income, or you cannot certify the ITR which is filed per se. It doesn't fall under any of the category. Now what is the way out? You can take help of agreed upon procedure, wherein you can issue a certificate that on so and so date at so and so time, you have downloaded the income tax return from the website by taking the credential from the client, and you are only certifying that this is the downloaded statement, nothing beyond that. Now when you do that, actually you restrict your liability. Compare that with a scenario when you are attesting in the sense signing of the ITR return which is filed, saying that it is a true copy. True copy doesn't have any meaning, because unless and until you have UDIN, you cannot give any attestation also. Now UDIN is categorically prohibited for ITR if you read the FAQs of UDIN. So you need to desist from that. But you have to find out the way out so that the client is also getting your services, the banker is satisfied, and you are getting your fees. And the last part is very vital. You shouldn't be doing anything for charitable purpose. We don't have any CRS funds as as a firm. So you don't have to get into that. You are not a NGO. So ensure that wherever you are signing off, basic things are available to you. First thing is the appointment letter, wherein it is categorically stated that what is the scope of service which you are providing. Second one is that the acceptance letter from you, followed by maybe a MRL which you might require, and then only the deliverables are given. And in all these things, ensure that you are not doing any backdating, including backdating of digital signatures. I am well aware of that most of you are aware about how that backdating of digital signature is done. Desist yourself from that. Don't get into that particular area wherein you know the technology. Don't make use of technology for a different reason. And once we start following those dates, actually, if you just have a simple rule followed, which includes myself also, that you are not going to sign off anything backdated, things are going to be very simple and straightforward. Only thing is that we need to decide about that. And more you start reading on standards on auditing, more and more you are going to get scared about that, the way you are doing the practice. And believe my words, whenever I'm speaking on standards on auditing, the rest of the, my day is not that, that good. I keep on asking myself as to whatever I am saying, I need to first follow. And why I'm saying this very critically and openly is that the discipline should start from ourselves. We have standards, we have SQCs, we have everything. The question is that we need to follow that in letter and spirit, and not just from compliance point of view. Yes, sir. Yeah, I will divide that into two parts. One is that those who are going abroad, many a times network certification is required. Many a times the consulate asks for that. Now, whenever such services are concerned, you can go for agreed upon procedures. So instead of going or attesting or certifying a particular income level or a net worth level, what is agreed upon procedure? The client will give you the details of his all assets and liabilities. He will undertake that everything is disclosed to you. He will give the supporting documents, like say balance confirmation, certificates, or maybe demat statement, copy, or mutual fund statement copy. Based on that, you will certify. Now, when you do that, it's an agreed upon procedure. You certify based on whatever data is made available to you, and nothing beyond that. So the onerous responsibility of confirming the net worth doesn't belong to you. It's based on limited assurance. It's not the full assurance. That is first thing. As far as income level is concerned, what you can certify is what kind of ITR was filed, and as at a particular timeline. For example, suppose today at say 11 o'clock, I have downloaded income tax return from a website, and immediately after that, say in 10 minutes, someone files a revised return. So earlier income was say 10 crores, now the income is only 10 lakhs. These things are practically possible. So what I'm going to certify or say is that it's agreed upon procedure. Client has asked me, shared his credential. He has asked me to download that income tax return from the website. I'm only confirming that this is a downloaded income tax return, and that's it. I am not certifying income, because I can never certify income of anyone unless it is audit, full-fledged audit. So like for a corporate, I can certify that so and so financial year, this is the income based on audited financial statement. Now similarly, for a proprietorship or for a individual, I cannot really do that, because he has filed the return. I don't know his income sources also. So what I'm going to certify is what is filed with income tax authorities, nothing beyond that. Same way, just to extend that, suppose someone asks you to certify a stock statement. What you can certify is that on the basis of actual verification as on a particular date, this was the stock. If that is not the case, if you want to certify something backdated, you can certify only based on documentary evidences. You cannot count it. So that's where you need to go for agreed upon procedures. So choose the standard wisely and ensure that whatever you are stating in the certificate, you can prove it at a later date also. And there is nothing like wherein you need to go overboard, irrespective of whatever the bank requires. For example, KYC document. Your certificate can never become a KYC document for a bank. You cannot certify that so and so person is residing at a particular place. You are not the authority even to give such kind of a certificate. What you can certify is that if someone is giving you Aadhaar card, a copy of that, you can say that I have verified with the original. That's it. You cannot certify that the Aadhaar address is correct or he is residing at that place. So that was the point, to choose the standard correctly. Sorry? There is no issue with the UDIN, because there is a separate UDIN for this kind of certification, and there is a residual option. Any other certificate you can go with that, but make it very clear that under which standard you are issuing a certificate. So mention the SRE or SAE, whichever you are using clearly in your certificate. Now, as far as standards are concerned, what is the basic purpose of that is whenever, a financial statement is presented and whenever the audit is conducted based on standards on auditing, that is all the standards are followed, it ensures that the information given which is there in the financial statement is of a high quality and is accepted worldwide. Now, what is the meaning of that? Now, if you look at any standards on auditing, all are based on international standards on auditing, that is ISAs. Now, the reason why ISA becomes forms a base of that is all the countries across the globe, they take the base of ISA and there are certain carve-in and carve-outs are there. So, it's not a verbatim way to adopt the ISA per se. Now, why ISA is required? The ISA is required because there has to be a global benchmark so that almost all the countries will follow the same benchmark. Just to give a comparable example, when we talk about accounting standards, now gradually as we are moving for Ind AS, so Ind AS is a kind of a carve-in carve-out of global accounting standards. So similarly, for standards on auditing also there is a carve-in carve-out. Let me give you a classic example of that wherein carve-in carve-out are instrumental. There are a lot of debates which are happening about SA 600. Many of you might be aware about that. Now SA 600 in India per se is altogether different as compared to the global standard. And there is a reason for that. Now, what is SA 600? SA 600 talks about the branch auditor or a subsidiary auditor and a consulting auditor. That is a holding company auditor. Across the globe, the concept is that the one who signs the Apex balance sheet or Apex financial statement, he is responsible for all the subsidiaries, branches and everything. That is a global standard. In India, we have, there is a carve out for that. In India, what we say is that whenever a unit is audited by a chartered accountant who is equally competent as compared to a holding company chartered accountant auditor, he is responsible for that particular unit. So be it a branch, be it a subsidiary, be it a joint venture, we treat everyone equal. Second thing is that in India we have a regime wherein all the corporates are audited. So we don't have a regime wherein there is an option in audit for corporates, which is a global benchmark. In many countries they don't have mandatory audits for corporates. In India we have audits irrespective of whether it is really running or not. So even a 1 lakh rupee paid up capital company having no business gets audited. So here the equation is different. So everyone is responsible for the unit and the holding company auditor is only responsible for consolidating the financial statements and nothing beyond that. Now the changes which are in discussion are exactly opposite to that. So be aware about those changes which are going to be there, because there is a likelihood that some change will occur in SA 600. As of today, there is no change. So what we believe traditionally still continues. If it undergoes a change, there will be again a series of seminars on understanding the new SA 600 because the things will change dramatically. Second thing is that as far as compliance of standard on auditing is concerned, you cannot read a standard on a standalone basis or are interlinked with each other. Now when I am talking about say SA 200, which forms the basis of all the standards on auditing, that is the starting point. So it includes almost each and every standard references. And vice versa, each standard contains reference of SA 200. So there are cross references. What we need to understand is whenever you are conducting an audit, first and foremost thing is that the entire audit team should be aware about which set of standards on auditing is applicable to a particular audit. So for example, when I am talking about say SA 600 or maybe any other SA, I need to know that whether it applies to my unit or not. So when I am doing a standalone entity, naturally branch auditor or holding auditor concept will never apply to me. So that standard is not applicable. But barring few standards, if you look at all the standards, almost all standard will apply maybe in certain way or other to almost all the audits, whether it is a dormant company or a functional company. Now what is the way out to really follow the standards on auditing? I will just share my practical experience about that. What I generally believe is that if you have a simple index of the standards on auditing, make the audit team aware about which standards are applicable to this audit, and at the end of the audit just take a confirmation. Maybe ask your audit team member to talk about every standard, how they have followed it. Maybe in a nutshell of 2 to 3 minutes, which is more than sufficient. The moment they start presenting before you as to how each standard is audited or each standard is followed during the audit process, you will be doubly assured that all the standards are followed by your audit team. So when you sign off a balance sheet, typically at the last moment, there is a very short of time which you are running. So how to ensure that the audit team is following the entire standards is a simple yardstick. Ask them that whether each and every standard is followed. Second thing is that there are checklists which are available and which are published by institute for accounting standard also and for standards on auditing also. Make use of those checklists. and ask your audit team to fill up the checklist. Ideally before the audit, and technically also before the audit. Practically, all of you know the answer. Another very important thing is that once the extended due dates and other dates get over, just introspect yourself, sit along with your audit team and ask them to tell them frankly as to which auditing standards were skipped by them, so that the next time those can be taken care of. Now I am giving you this practical aspect is that it's very easy to say all these things from a dais by saying that everything should be followed. For a smallest of the audit also, where you are having an audit fee of say 10,000 or 20,000 or 25,000. In reality, I know that it's a hard job, but at the same time you have to be compliant with that. So introspect yourself with your audit team as to where you were not comfortable or you have skipped certain things. Ensure that those things are plugged or some parallel methods are followed or adopted, so that every standard is really followed in verbatim spirit. Another very important thing is that whenever any standard is not followed, if it is proved that you have not followed a particular standard, you will be held responsible for a misconduct. So be little careful about that. And there are certain things wherein I should say we habitually don't follow the standard. Let me give a simple example. All of you are aware about the standard which is there for balance confirmation. Everyone is aware about that. Tell me frankly, how many of you have really followed that for MSME clients? The reason being, we believe that whatever is ledger account is there of our client, we scrutinize that particular ledger, and if we presume that replica of that will be there with the other person. Second, standard, which I will just put in, events occurring after the date of balance sheet. Typically, what we always perceive is that we are talking about events which are occurring after the date of balance sheet and which affect the earlier financial statement. But you need to go little beyond that. Many a times there are evidences which prove that you need to change your audited figures because of certain events. And many a times we give an assurance in our audit report that from the date financial year end, that is 31st March, till date of signing of the balance sheet, we have not noticed any material event which is affecting our financial statement. But very few of us have minutes on record or have documents wherein you have reviewed the minutes of that particular company between that period, because that is the only way to capture those events for a corporate client. For non-corporate clients, MRL can survive. But if you are looking at a corporate client, and if the minutes are not seen by you, not documented by you, that you have seen the minutes, practically this assurance which you are giving is futile. So read your audit report carefully, see what kind of assurances you are giving to the reader, wherein you say that all the standards are followed, the code of ethics are followed, all SQCs are followed. But it's time to introspect yourself. I might be sounding little critical, for all of you. It's only to, awaken you about certain things where we are lacking actually. And it's high time that, we wake up and do certain processes. Now, few things few jargons which are typically used across the, standards. I just thought to touch upon that. First is material misstatement. So firstly, we need to identify or we need to decide as to what is material. And second is that what is a misstatement. Now misstatement is nothing but uncorrected statement or uncorrected figure which the client is not ready to rectify. So that is a misstatement. So errors can happen. You can give MOCs in simple terms, or you can have the rectification, it is passed on. If the rectification is carried out, the misstatement gets removed. You don't have to qualify. You don't have to say that there is a misstatement. If the unrectified financial statements are there, if it is material in nature, you have to say that there is a material misstatement, and then you have to follow the route of SA 700 series, that is SA 705 or 706, depending upon what kind of statements are there. Of course, if it is a material misstatement, you have to go for a modified report. Another thing is that whenever there is a material misstatement is there, it will mean that the financial statements are not giving a true and fair view. Now, always remember this point, that material misstatement need not be in terms of figures. Let me give a simple example. Suppose there is a wrong regrouping is there. So, under say expense head, some indirect expenses are there which are clubbed in direct expenses and vice versa. You need to ask yourself as to whether it is a material misstatement or misstatement is there or not. And can you say that it is a true and fair view? Because the user of the balance sheet believes in your report. So when you say true and fair, it is not only arithmetical calculation, it includes the presentation also. Let me give another example. For example, if you have a particular format of balance sheet which is prescribed in say a particular statute, and if that entity doesn't follow that particular format, can you say that it is a true and fair view? All the figures are correct. Just to give a simple example, like say if there is a private limited company, instead of preparing the balance sheet in a vertical format, it is preparing in a horizontal format. Or to per se give, giving another example, instead of rounding off the figures, which is now mandatory under the Companies Act, someone gives absolute figure, that is full figures. Now in this case, you cannot say that, see, there is no material misstatement as such, but the format is not followed. So it results into a scenario wherein you cannot say that it is a true and fair view. Let me give another classic example. I generally speak more on bank audit, so let me give that example. In urban cooperative banks, again there is a format of balance sheet. So if you look at the banks, there are broadly two categories, commercial banks and cooperative banks. For commercial banks, there is a vertical format, similar to Companies Act format. For urban cooperative banks, there is a horizontal format. Now many banks might follow a vertical format under the presumption that that applies to me. Now suppose I am an urban cooperative bank, I cannot adopt a format which is applicable to a scheduled commercial bank, because the Banking Regulation Act has specific format, similar to Companies Act. So I have to follow the format which applies to me, as an entity. If it is not followed, as an auditor, you have to say that it does not disclose true and fair view for so and so reasons. Now let me ask you an interesting question, a little controversial question. Institute has given a guidance about non-corporate entities' financial statements, as to what should be the form of that. I just wanted to know a overall view. Suppose someone doesn't prepare that, in that format. It is already postponed, but let's presume that it is applicable. Can you say that if someone is not preparing that in the same format, it deviates from a format? Will you qualify your report, or you will say that it is a true and fair view? I am sure that many of you had already discussed a lot about that when it was the pronouncement was there. Okay, let me ask you another question. How many of you have seen the format? All of you have seen? Okay, if someone doesn't follow that, will you qualify the report? Or still not decided? Next year, we'll see the next year. No, losing the client is not based on our report. Let me be very frank. It depends on altogether different factors. Yeah. No. So, will you skip that qualification, or you will? You will qualify. Okay. All of you will agree with that? Sorry? No. So you will qualify, or it will be emphasis of matter para, or other matter para? What it will be? Okay, let me give you a couple of hints, and I will leave it to you, because even I don't want to express. Yeah.
As you are the auditor,
Yeah.
you are going to prepare, no, as per the format. Client is not going to prepare.
No, sir. It's exactly opposite way. I am not going to prepare any financial statement. Client has to prepare. If I am preparing, there is a conflict of interest. So there is no question that I will prepare any format. Yeah. So client will say that I have not prepared financial statement based on that format. Okay. I will just, give couple of, points for debate. Yeah, I will tell you where the challenge is. First thing is that many times what really happens is, if there is no specific format which is given in a particular law which applies to that particular client, it becomes a challenging thing. At the same time, once it becomes an institute pronouncement, for auditor it's very difficult to say that I will not follow it. Now what is the real way out is that we can always mention that a particular format is not followed by inviting the attention. So and we can say that it is not affecting your profitability, or something of that sort. So probably institute will anyway come out with formats and other things, but just think yourself as to if the format is not followed, what are the reasons for not following the format? Forget about qualification and other things, because the format is pretty simple. It's a normal format. There is nothing great about that. It's only a comparison of current year and last year. Beyond that, most of us will see that the client is preparing in the same format. There is not much of a deviation per se. Then what is the reason for deviating from that format is the question which you need to ask yourself and to your client, that tell me the reason why you are not preparing in a particular format. Second very important thing is that, since that point was touched upon, never get into an area to maintain books of accounts of your client where you are doing the audit, Never venture into an area to prepare notes on accounts, financial statement. That is not your responsibility. I know that many of us are preparing that, but that is something which you are already going against the standards on auditing. You are going against SQC. There is a straight conflict of interest. And it's very easy to prove that in case something goes wrong. You know that you have prepared the financial statements. So never ever get into that venture. Let him prepare whatever way he wants to prepare, rectify that. You know, rectification is something which is in your domain, because as an auditor you will say that there is no material misstatement. So all misstatements are required to be corrected. So venture till that extent. Don't get into the area wherein you are not supposed to venture as an auditor. If you are not an auditor, you can do everything and anything. You know, so there is no bar on doing all these things. Now, as far as true and fair is concerned, a couple of points which I've just jotted down. And when you are certifying any statement which is true and fair, always remember a point that you are not certifying true and correct. So you have to follow the true and fair framework only, and true and correct framework is not supposed to be followed. Let me give you again, a couple of practical examples about that. When we talk about a financial statement, true and fair is fairly understood by all of us. That there should not be any material misstatement. That is one thing. Second thing is that you are assuring, when you are expressing the opinion that a particular statement is true and fair, you are assuring that you have got all kinds of satisfactory evidences, that is audit evidences, which are made available to you. So there is no information which was not made available to you. So when you say that sufficient and appropriate audit evidence are available to you, there is no material misstatement, then only you are supposed to issue a true and fair view without any qualification or modification. So always remember these basic 2 points. Once these 2 points are complied, as far as your audit processes are concerned, you are free to issue true and fair view. Of course, you can have emphasis on matter para, which is again without qualifying the true and fair view. So you can always add certain points in, that emphasis on matter para. Second important thing is that when you talk about certifications, let me just touch upon that also. Certificates are also supposed to be issued as a true and fair certificate only, and not true and correct certificate. The reason being, there is nothing like true and correct. It's always true and fair that there is no material misstatement which you are making, be it certificate, be it audit report, be it anything which you are signing off. So wherever true and correct wordings are used, maybe under a particular law and regulation, issue a covering certificate by saying that it's a true and fair view, and attach that certificate as a kind of annexure. Because many a times RBI or certain government authorities, they ask you to give true and correct kind of a certification, including tax audit report, if you read it very carefully. Now you need to give a disclaimer for that to ensure that you are under true and fair regime only. Let me give again a classic example. Suppose you are doing a bank audit or any corporate audit, you will do a cash verification. Now whenever you are doing a cash verification, can you practically say that it is true and correct? Right? Because you may be doing it on a text check basis, or maybe even if you count each and every note, currency note, you are never sure that there is no fake currency note. You are not the expert for that. So you give a true and fair kind of a certificate itself. So whether it is a stock taking, whether it is a cash verification, any certification, it's true and fair and never a true and correct. So always remember that the format which you are following for certifying, just don't sign off the format which is given by the regulatory authority. Yeah. Yeah. So ideally, you see, when you give the physical verification certificate, it has to be given in a format. That is never supposed to be done. You have to issue a separate certificate. Signing is only to authenticate, not a certification. So there is a separate guidance note which is for special purpose reports and certificate that is required to be followed. No, correct, but the wording has to be very specific. See, I will ask the other question. Why I am saying that also, I will give you the reason. So issue a separate certificate on your letterhead in the format which is prescribed. Yeah. No, see, for corporates actually, if they are preparing 2 sets actually, one is full figures, another one is rounded off. Now what you can issue an audit report is only for rounded off, because as per Companies Act now that is mandatory. You need not. You need not. See, there is no compulsion. No, but as per Act, they are registered under Companies Act. They have to follow the Companies Act. No, but they will never ask you to certify that. But it is rounded off. You should not sign. Under Companies Act, you are not supposed to even sign. It's a violation of law. No, but then you have to qualify. But can you sign two balance sheets? One is rounded off, one is full figure. So, okay, it's only full figures. But then you qualify the report. See, it will come under as a qualification, and under law and regulation, that is the last para of SA 700, you have to qualify. By saying that rounding off is not done. You have to qualify that. They are not giving. Okay. Yeah, yeah, yeah. No, you can raise doubts on going concern and specify that. Specify in your audit report. There is a format for that paragraph also, and there is a illustrative format how to specify that also. Yeah, exactly. See, now that UDN has recently got changed, for the same reason. So wherever you are having doubts, you have to say yes in that. Yeah. It's for that purpose only, so that your audit report is crystallized through UDI. I know UDI taking is very difficult. You have to read your audit report again. But let me tell you one thing. It's a good thing. Many times we are skipping on certain things, when we do that. So at least at the time of UDN, we become aware that there is a, exactly. I know that, it's initially if you look at it, it becomes very cumbersome. But just introspect, it's a good thing actually. It's a kind of a cross-check mechanism that everything is whether I'm seeing that or not. So suppose, by mistake, instead of opinion, see sometimes the, typing errors happen. Instead of opinion, you write qualified opinion because last year was qualified opinion. That is a common reason. But at least now when you are taking that UDI, you will ask yourself whether I was really intending to qualify a report or not. No client goes away. I will give you example. I will give you example of myself, wherein I qualify the report. And maybe in many cases it might be applicable to many of you. See, many times AS 15, that is retirement benefit, the actual valuation is not available. There is no fund also which is created. So many times the provision is done on the basis of actual. So actual gratuity is calculated, provision is made because that is, that doesn't really affect the profitability, in a large way. Because number of employees maybe are say 30 or 40. Now in that case, if AS 15 is not followed, it means that there is a violation of accounting standard. You have to qualify the report. So it will be a qualified opinion. It's the most common qualified opinion reason. So provision is made, but provision might be on a higher side because actual provision will be always on a lower side. So you have to state the reason. You don't have to even quantify, but you have to state the reason that the client has made a provision on the actual basis instead of actuarial. So there is to that extent there is a deviation from accounting standard. Harmless qualification. Client will never bother about that. And let me tell you, I have yet to see a client, typically a corporate client or a MSME client, who fight with the auditor about what is written in the audit report. They are not even bothered about that. Utilize the end use of fund. Yeah. Yeah. No, you have to ask them the evidence. No, but the fund flow will be available through the bank statement. Yeah. You have to ask for that evidence or you should not certify. No, they have to, they have to give you the money trail. Yeah. But then you have to ask that actually for evidence, because for some reason, say if company A is giving funds to company B for a particular end use, company B is bound to give that evidence to company A. If not, you have to qualify by saying that the documentary evidence was not made available to you. Correct, but if you are concerned about the end use, so if it is not available, you have to specify that. No, that is a responsibility of company A. to give all the evidences that this was the purpose, for which the funds were given to be. Agreement is never sufficient. No, see, if there is a diversion of fund, if there is no documentary evidences, you have to qualify. No, but why you are responsible for that second entity? No, but then where you are answering that? Yeah. No, but where you certify that? It's a NBFC. So listed company has given funds to another company for a particular end use. So if that is the, no, you can ask the company to produce the evidences. If they are not producing, you are free to qualify the report. Of course they will give, if it is for specific purpose. They will definitely give that. No sir, if you are certifying, you have to ask. See, if you are certifying something, you have to ask them and satisfy yourself. See, if you read the wordings, the sufficient and appropriate evidence should be made available to your satisfaction. Your means whoever signs that. So, you cannot have a concrete kind of a thing that what kind of evidence is. That depends upon the circumstances. See, if you are having evidence that there is a money laundering, you have to simply qualify that. If you have that evidence. If not, give a disclaimer by saying that the adequate records were not made available to you. It's a disclaimer of opinion then. If the company is not giving you any data, it's a disclaimer of opinion. It is the highest level of modification which will be there in audit report. Of course. Yeah. Exactly. You should have access to that. If it is not there, it is a disclaimer. Because they are not, they are holding back certain information, which is not supposed to be the case. Yeah, banks, NBFC, they have to ask. They have to keep that on the record. If not, you can qualify the report. So like suppose in case of a bank or NBFC, when they give the funds, they need to ensure that the end use is there. If the end use is not there, auditor will qualify the report. Yeah. There is a comma hand which I have left it about the regulators. It's only an indicative or illustrative list. It's not an exhaustive list per se. No, nothing of that sort. Because the list will go on actually. In fact, once I say regulators, actually everyone is covered. And frankly speaking, audit report is a public document. So anyone can practically say that I have relied on this financial statement because you audited that and I have taken a certain decision. So you have to be taking utmost care as to what you write. Because there are so many assurances which you are giving by way of your audit report that you need to be well aware about what you are assuring, what you don't want to assure. So be very clear about that part. This was just an illustrative list, nothing of that sort. Now as far as standards on auditing is concerned, it's just a framework, just to give a guide. Yes sir. Yeah. Yeah. Yeah, actually, there is no guidance which is available in Companies Act for that. So many times it gets skipped. There is no violation for that, but it depends upon the practice. Many companies follow a practice that the format verbatimly is followed, at least that main format. And schedule is of course skipped because that is not there. My personal view is that is a better view. So that there is a comparability. Like say 20 items are there, so everywhere 20 items are there. I don't have to see that out of 20 only 16 are shown because 4 are not there. But that is my view. Companies Act per se doesn't talk about that. Institute Guidance Note doesn't talk anything about that. So it's left to the discretion of that whoever is preparator of that particular balance sheet. My personal view is that it's better to retain. Because you have a standardized format, then you don't have to really skip certain things, at least in the main portion. Schedules can be skipped, because if there is nothing, you don't have to give any schedules. Yeah. As far as elements of assurance engagements are concerned, first thing is that it's a three-party relationship. So one, you are having a user, another one is auditee, third one is the auditor per se, that is yourself. And some certain things which you need to follow about the assurance engagement is that the appropriate subject matter is there, that you need to know that for what you are having a assurance engagement. Suitable criteria has to be decided about the particular engagement assignment. Sufficient and appropriate evidence availability has to be seen by you. Written assurances report are required to be issued from your end. Just a list of standards actually, just to give you an idea about the SA 200 series, 300 series, 500 series, 600 series. The series are basically related to a particular subject matter. So suppose, for example, if you are looking at the risk assessment, you have to go with SA 300 series. If it is audit evidence, you have to go with SA 500 series. SA 600 series is about using the work of others, like maybe internal auditor, auditors expert, management expert, or as I said, SA 600, the component auditors. So that is SA 600. SA 700 is about the audit conclusions and reporting. That is typically a reporting kind of a series. SA 800 is specialized areas wherein the assurances per se are not given. Those are comparatively different standard. Typically say prospectus related services which are given. SA 2000 series, we already discussed about SREs, then SAEs are there, and then we have SA 400 series, that is SRS series are there. It's only a kind of a snapshot just for your reference purpose. Then we have guidance note. As far as guidance notes are concerned, all the CAs are supposed to follow a guidance note, with one exception, that if you want to deviate from the guidance note views, you have to put that in writing and make it form of your audit working paper file. So you can deviate from guidance note, but then you need to have a reason to deviate from that. You can hold a different view. So compared to standards, guidance note are slightly lower in hierarchy. Those are not technically mandatory. Why I am saying technically mandatory is that you need to prove that why you deviated from that. So the better way is that you follow the guidance note, unless you are having a very firm view that what is written in the guidance note is wrong, or you are holding a very strong viewpoint that a different view was supposed to be taken by the institute. But this is something which rarely happens. So be aware that which guidance notes are issued by the institute. So just to give an example, as I said, special purpose report and certificate guidance note is already there. So whenever you are issuing a certificate, simple signature is something which is not supposed to be done by you. There has to be a covering report or certificate depending upon which kind of certificate which you are issuing. I just gave you a couple of examples, like say network certificate is there, stock statement, attestation is there. You have to have that covering certificate. The illustrative formats are already there. And in fact, recently CAQ has also issued a utility about those certificates which are required to be issued. Make use of those utilities. Usage of utility per se is not mandatory. Those are not guidance note. Another thing is that if there is a technical guide which is issued by institute, that is also not mandatory. It's only a study material kind of a thing. So the word guidance note is important, and if you are aware, actually there is a color code scheme also. If it is in pink color, it's typically a standard. If it is a green color, it is a guidance note. So whenever you see a publication, you can make out as to what is the gravity of that. So if you see the book and the covering page, actually the color speaks about that. So guidance note, again to reiterate, just ask yourself whether you are having all the guidance note with you or not. If not, check up on the website. Many times there are guidance notes which are available, but we are not aware about that. So don't let that happen. Now SA 200 general principles we already discussed about what are the general principles are there. See, as far as this SA 200 is concerned, it's typically called as mother of all standards, in the sense it is a starting point for all the standards which are given after that in various series. Now couple of things which are very vital is that as far as SA 200 is concerned, SA 200 per se doesn't talk much about how to comply with a particular standard. It's a kind of a starting point. So for example, if you are talking about using the work of other auditor, it has a reference point in SA 200, but SA 200 doesn't define the rules. Rules are defined in those specific standards. So SA 200 practically directs you toward particular standards. You know, it keeps on directing you that, you know, these are the things or these are the checkpoints which you need to comply. It per se doesn't give you a specific guidance about how to do the audit. It gives you an overall picture about overall gamut of, you know, audit and assurance services. Now, as far as scope is concerned, it does not ensure, whenever you are, you know, giving any audit or assurance services, auditor per se will never ensure or never talk about the future viability of a particular entity. So we cannot guarantee that how the entity is going to perform in future. So your wordings are never, you know, are expected to be in that line. Second thing is that we never comment upon about the efficiency and effectiveness of the management, because we are not the one who are, you know, doing their appraisals also. And standards on auditing per se, if you look at it, the standards don't impose responsibilities on the management and those charged with governance. They impose the responsibility on the auditors. Standards are there for us to follow and not to the management to follow. So always remember this point. And another very important thing is that no standard can override the laws and regulations which are applicable to a particular entity. So if a particular entities are, you know, governed by a particular law which is deviating from any standard, whether it is a standard on auditing or whether it is an accounting standard, then naturally the accounting standard takes a lower seat or a lower berth. Let me give you an example. Suppose, for example, if you talk about accounting standard, and if a regulated entity, the regulator issues a guidance which is deviating from a particular accounting standard, you have to follow that. And the maximum thing which you can do is that you can mention that in emphasis of matter para without qualifying the report. Let me give you an example. Suppose, say, if you talk about, say, SA 15, you know, just to give an accounting standard 15. Suppose a retirement benefit limit is increased. So there is a sudden, you know, burden on the profit and loss account of a particular year, and maybe, say, a regulator like, say, Reserve Bank of India allows that staggering for next 3 years. So it's a clear-cut deviation from standard. You cannot qualify the report. You can only mention in the emphasis of matter para. Similarly, for standards also, what you need to ensure is that wherever there is an overriding principle which is given in the law and regulation, you have to follow that, and you have to forego that, you know, context in terms of standard, you know, compliance. As far as practical and legal limitations on abilities to get the evidences are concerned, whenever the management or those charged with governance, they are not able to provide that evidences to you, either intentionally or unintentionally. Either way, if the evidences are not made available to you, then you have to qualify the report or modify the report, unless, you know, it is prohibited under the law that certain evidences are not supposed to be given to you. Let me give you an example. There might be certain transactions which are carried out by a particular company on behalf of central government, which are covert transactions, you know, like they are covered transactions. Just to give an example, Reserve Bank of India might ask certain public sector banks to undertake a position in, say, US dollar. And those instructions are carried out based on the instructions which are given by the regulator. So in those cases, the bank can deny you certain, you know, evidences related to what kind of transaction they have carried out and how the transactions are ending up in terms of relations with Reserve Bank of India. So there can be a limited information which can be made available to you. So wherever there is a restriction under a law not to make information available to you, you can go by that. But why it is not made available to you, that is something which you need to record in your audit records and satisfy yourself. Like suppose there is a defense deal and certain critical components are there which the evidences of which are not made available to you, but it's only a gross level, you know, summary which is given to you because it is prohibited, you know, under a particular law. Then you cannot keep on demanding that, you know, the details are not made available to you because it is prohibited under a regulator or under certain laws and provisions. So ensure that, you know, you are not really, you know, touching upon that aspects. Another thing is that many a times you have to balance between the benefits and cost which are there when you comply with the standards on auditing. Typically, the matter of difficulty when you comply with standards, the time which is available to you and the cost which is, which is involved to comply with the standard. The very important factor is that always keep in mind that irrespective of the fact of time, cost and benefits, there is no leverage which is given for non-compliance of standards on auditing. You can find out a parallel way which is suggested in standard. Just to give an example, in COVID time, almost all the auditors were not really following the same path which was there prior to pandemic. You know, we relied on the evidences in the form of, scanned documents, screenshots, or maybe at times, video shooting which was going live, and we relied upon that. Now, all these are parallel, kind of procedures which we followed. So what we need to do whenever you are doing a procedure which is deviating from the standard, you need to document it, and it's an alternative methodology, and there is nothing like skipping a particular method. So always ensure that whatever is required under a standard, that is followed in verbatim. Second very important thing is that there is nothing like a dilution for a small company or a MSME company or a MSME client. All standards apply verbatimly. There is no dilution. The new standards for MSME, which are in vogue or which are in discussion, there also it is very categorically clarified that there is no dilution of standard which will happen. The dilution will be limited only to the extent of language which is used. So it will be easy to digest and not easy to dodge a particular standard. So don't be under the impression that MSME standards are there. So now it's a free time for all of us. There is nothing of that sort. All standards are going to be there. More standards are going to be added. And you are always will be struggling with the cost benefit analysis as to what kind of costs you incur in complying the standard. And benefit is nothing but your audit fees, what kind of audit fees you are getting. So strike a balance between that. Have your own procedures defined, but you cannot dodge a particular standard by saying that it's a costly affair, or it is involving more time. So I thought that it is not worth it for a particular client. There is nothing of that sort. Then another few things is that as far as the expectations are concerned, SA 200 talks about the expectation from the auditor also. Go through those expectations categorically. The reason being is that there are too many expectations are there from the auditor. But to put it in simple terms, what is expected is that you need to satisfy yourself again on 2 points, that you have applied your professional judgment, you have applied your professional skepticism, you have gathered sufficient and appropriate audit evidences, you have assured yourself that there is no material misstatement, and then only sign it off. Now what is very important in all these things is, whenever you talk about sufficient and appropriate audit evidences, we tend to compromise on certain things by relying on the client. We feel that this particular client is there for 20 years with me, so he will be always talking the truth with me. He can never say something wrong, or he will never hide certain things from me. First, get out of this presumption. What is meant by professional skepticism is that you need not be in the investigative mode, but you should not believe blindly to anyone, be it your audit team person or be it your auditing. Why I am categorically stating about your audit team person is that many times when you ask verbally about whether certain procedures are performed, everyone will say yes. Just ask couple of questions to test them as to whether that particular procedure was really followed or not, or it's only assurance, verbal assurance given to you. So that's why when I said that you take a reporting from every person in the audit team, ask them to speak maybe for just 2 minutes for every standard as to how they complied it, and many things will be revealed. Let me just again give you a simple example of, say, a bank audit. Many of you must be doing bank audit, so we send our articles for doing routine concurrent audit. Just ask them one question as to how many of them have calculated the interest which is calculated in the saving account. If they say yes, just ask them the process of doing that, and the things will be very clear. That is professional skepticism. Similarly, when you rely on a particular client, if they are saying that they have carried out physical inspection of all the inventory, all the fixed asset during the year, and in Caro we give the assurance by saying that the management is carrying out that particular thing. Just ask yourself as to whether they are having that kind of a machinery to carry out that kind of a physical verification, and what kind of evidence they can produce before you, that the physical verification was carried out. At least they should have a checklist or a list of fixed asset or inventory which is ticked by them, signed by them on a particular date. And if you are doing an audit of a large company, if they say that there was no deviation found in a stock record, that is something which is very wrong with them. You cannot have everything 100% accurate. There can be some deviation. It can be a minor deviation which may not be material, but having 100% accuracy is something which is inhuman. So just test about what kind of evidences they are producing before you, and assure yourself. Now, as far as overall objective of the auditor is concerned, we already talked about that, so I will just go further. As far as financial reporting framework is concerned, let me talk a little bit about that. Whenever we talk about financial reporting framework, as far as that fair presentation framework is concerned, we already talked about that. But in certain cases, there can be a compliance framework. It's a very rare case wherein the fair presentation framework is deviated. Now, in those particular cases, you need to first verify as to why compliance framework is applicable to a particular entity and why not a fair presentation framework is applicable. Now, if you are satisfied that whenever there is a compliance framework is applicable, for example, if you are doing a special assignment on behalf of say CNAG, and there are certain different findings which you have to present, it can be a compliance framework. A specific format is given to you, and you are supposed to certify in that particular format only. So it's not a fair presentation framework format. They have a different reason for that. Or maybe just to give another example, suppose you are appointed on behalf of a liquidator to prepare a balance sheet on a realization basis, or maybe certain conservative basis or principles are given to you under a particular act or under a particular direction. It will not be called as a fair presentation framework. It might be a compliance framework, but it's not a common scenario. In normal circumstances, it will be always a fair presentation framework only. Few things which you already discuss about that. Another just one or two aspects is that as far as appropriateness is concerned, whenever you are gathering the audit evidences, first check that whether it is passing the test of appropriateness. For example, if you are talking about say a balance confirmation certificate, just ask the procedure which is followed by that particular client as to how that confirmation is obtained. Suppose the confirmation is in the form of a ledger account which is sent to that particular counterparty, and the counterparty is only acknowledging as received. You cannot call it as a confirmation. Somewhere he has to confirm that the balance is matching, or maybe give a counter ledger account which is available to you, or a balance confirmation which should be made available to you. Otherwise it's of no use. So whenever any evidences is gathered by you, you need to test that whether they are passing the test of appropriateness or not, and it will again depend upon on a case to case basis. Let me give another example. Suppose there is a legal case which is going on, and based on certain assumptions, there is a provision which is made. Now in all these cases, it's a subjective matter. So you need to satisfy yourself as to what kind of evidences are produced before you, whether the sufficient provision is made by that particular client, that is the auditee or not, and what are the reasons for not making the entire provision for that claim. So the circumstantial evidences are there, which has to be appropriate according to you and not as per the views of the auditee. So at every point of time, satisfy yourself. Forget about whether your client is satisfied or not. You need not be even bothered about that. So the moment it is to your satisfaction, then only you are supposed to be signing a clear statement or a clear report. Otherwise, always have a disclaimer, maybe subject to emphasis of matter and other things handy with you. As far as few other risks are concerned, there are a couple of things which will always happen. One of them is a detection risk. So whenever you are undergoing an audit process, there is always a kind of a risk which you are carrying. And to be very frank, irrespective of the audit, it's always a risk-based audit which you carry out. The reason being, you need to assess the risk of non-detection of a particular wrongdoing. Wrongdoing in the sense misstatement or maybe a fraud or something. Always remember one point, that you are not here as an investigator. You are here to believe that whatever is presented before you is presented before you in a true and fair manner without hiding anything. But at the same time, when you have your professional skepticism alive, there is always a risk of detection or a misdetection or non-detection which will be always carried with your audit processes. So when you inbuild your audit processes, always just factoring the risk that what kind of wrongdoings or misstatements may go undetected. What are the possibilities? So always harp upon the internal control system review, which should be existent at the client's place. And if you find out any lacunas in those processes, to that extent your detection risk will be on a higher side. If you are satisfied with the processes which are followed, that is the internal control systems which are followed at the client's place, you can be rest assured. In the sense your checking gravity will be reduced. Now let me ask you one more question. In certain corporates we give IFCOR certifications also, right? How many of us really test that IFCOR as a separate process? Or do we give it just because now it is mandatory? So we just pull up that clean report. I have rarely seen IFCOR reports which are qualified. Somehow it's always a clean a clean sheet kind of a thing. Why I'm saying this is, just see that what kind of reports you are signing. If you read the IFCOR report carefully and the fees which you are getting, practically no one of us can certify that IFCOR. Because you need to test the internal financial controls over reporting, and then only you are supposed to certify it. Prepare your own checklist for that. I'm not saying that get into a comprehensive mode for a smaller client, but you need to have at least a small checklist, maybe 3-4 pages checklist, to demonstrate that you have tested the IFC. So read that guidance note on IFC carefully, which is available, which we tend to forget, and then only certify it. Maybe not this year, maybe 25-26 financial year, because this year is technically already over on 30th September, even though the date is still there for filing the returns. So in the next year, you can again, think of it. What I will do is, since we are already running little short of time, I will share the entire presentation, but I will just move on to the other, standards, so that we are able to at least touch base a couple of them. Sorry for that actually, but standards on auditing is a bigger subject. Just to add actually, I will also, tell the chairman sir also, SSB is thinking about a refresher course about the standards on auditing. So maybe SSB will come out with certain courses it's a kind of a refresher course. Again with the same logic, we tend to forget about the standards, and it probably will be a comprehensive course. So let me jump to Essay 250, consideration of laws and regulation in audit of financial statement. Now, as far as this law and regulation compliance is concerned, if you look at the audit report, first I will touch upon the audit report. That is the last para is there, which talks about rules and regulations compliance, and there the auditor has to specify certain things. Now, why this is vital? See, if you look at most of the acts, in every act actually there is a section which asks the auditor to answer certain questions. So for example, Companies Act if you take the BR Act, if you take Multi-State Cooperative Act, if you take Cooperative Societies Act, there are certain questions which you need to answer. First, always identify that which law is governing your entity and which are the questions which you are supposed to ask. So from audit reporting point of view, your job will be over. Second thing is that whenever you are doing audit of any entity, you need to be aware about which laws and regulations are applicable to that entity, and if there is any violation, you are supposed to report that in your audit report. Now practically it is very difficult to know each and every law which is applicable to an entity. There might be 100 plus laws which are applicable to typically a big size company. But at least those laws which are governing the entity, as I said, say Companies Act, Partnership Act, LLP Act, make yourself acquainted about that. And whenever there is a deviation or a violation, you are supposed to report that. Let me again touch upon a tricky thing, a very easy thing to talk about law and regulations in audit report of financial statement. How many of you are acquainted with Cooperative Societies Act and UCBs per se, urban cooperative banks? Okay, you are aware about urban cooperative banks? So I'll give you a classic thing which is going to happen in 25-26 financial year. Recently, RBI has, not RBI actually, Parliament has passed the BR Act amendment, wherein the tenure of director is of 10 years now. So if a director is there in a particular urban cooperative bank for a continuous period of 10 years, he becomes ineligible. Now, as all of you are aware about, in most of the UCBs, the directors are there for a long tenure, 20 years, 25 years, 50 years also. I have seen a bank wherein a director, he was a director for a continuous period of 50 years. So all 10 elections he has won. So these kind of scenarios are there. Now, as per the BR Act regulatory norms, from 1st August 2025, if someone has completed 10 years at that point of time, he is ineligible. Now the same director will sign off the financial statements. So now compare this with Companies Act. Suppose under Companies Act, a director is not eligible to act as a director. Ideally, you will qualify your report by saying that, so-and-so director is not qualified. Same logic now will get extended to the banks. Because he is holding a position which is not eligible to hold, and still he becomes a director, takes all the decisions, signs of the balance sheet, and a number of things will happen. Now why I give you this example is similar examples might be there, for any entity wherein law and regulation is violated. So make yourself available, acquainted about the laws and regulation applicable to that entity. Convert that into either in presentation framework. As I said, for example, Schedule 3, the balance sheet is required to be in a particular format. Rounding off is required to be there. You cannot have full figures. And based on that, prepare your audit checklist. Then SA 550 is there. As far as related parties are concerned, first and foremost thing is that don't believe yourself that you know the client very well. Ask for a written representation from the client that who are the related parties. You don't know, first, have a strong, get away from the strong belief that you know the client. He might be there with you since he is, say, 18 years of age, and maybe continued with you for next 30 years. It doesn't mean that you know all the related parties. So take a written representation, and based on written representation, then identify the parties with whom he has done the transaction, and then appropriately you need to disclose that also. And secondly, you need to always see that the transactions which are carried out with the related parties, whether they were at the arm's length or not. Forget about whether TP audit is applicable or not. Irrespective of TP audit, arm's length transaction is something which will reflect on true and fair view. Because if suppose there is under invoicing or over invoicing with a related party, naturally you cannot say that it's a true and fair view. So it's not related to TP audit per se, but it's related to your true and fair view of your financial statements also. So the starting point is to take the written representation letters from the management. Now when you come to the written representation letters, there are a couple of misconceptions which many a times the auditor carries. That suppose something is given as a written representation, we believe that it is audit evidence. So first get away from that misconception. Written representation is nothing but giving views of that particular auditee in writing, nothing beyond that. It can never replace the audit evidence. So when you say sufficient and appropriate audit evidence, it doesn't mean that it includes the written representation. The written representation is what he believes to be true, so he will give you in writing. But that can never become, a kind of audit evidence. Now what he can give it in writing, just to give a simple example, if you look at the MRL, in management representation letter, what we take assurance is that he has complied with all the accounting standards, he is following the laws and regulations. So it's not an evidence per se, it's an assurance to you that he is complying certain things. Now compliance of certain things or confirmation of compliance is never a sufficient or appropriate audit evidence. Rather it is not an evidence itself, it's only assurance. So don't use MRL to replace the evidence. Many a times, there are certain things which are written in the MRL, which are in the form of audit evidence. Like they confirm that, so-and-so balance is outstanding with so-and-so person. How he can, say that actually? There is a balance confirmation which is required to be there. What he can give you the assurance? Like suppose the cash on hand on a particular date, he can give you the assurance. It belongs to him. There is no third party which is involved. But nothing beyond that. Compliance with law, he can definitely give you assurance. Compliance with say format of balance sheet, he can give you assurance. Compliance with accounting standard, that is very much possible. But can he give you a compliance confirmation that institute guidance note are followed? The answer is no. That is something which is required to be followed by you. If you ask him to give a confirmation that all the standards on auditing are followed, that's a wrong confirmation. You should not even take the representation letters from him. So what you can do is that to strengthen the sufficient and appropriate audit evidence, you can seek certain clarifications. And that's it for written representation. It doesn't carry more value beyond that. It's limited or confined only to the extent of having the additional assurance and not the basic assurance. Now there are three standards which are still left out. I think 15 more minutes. Yeah. So instead of slides, I will just cover up those standards because in fact, let me share one thing which I think Ketan didn't tell all of you. I added a couple of standards in my presentation because he was saying that the time will be short, but I said that let me add a few standards because I wanted to just touch upon the standards rather than getting into theory. So let me just touch upon SA 620, 610 and 600. I will not show you the slides for the simple reason because the slides are comprehensive, but all the slides will be shared with you. Let's first talk about 620, then 610 and then 600. See, 620 is about using the work of an auditor's expert. Now, why this standard is little vital is that many a times we are habitual in subletting certain assignments. So that's the reason why I picked up this SA 620. So I just wanted to bifurcate between what is a sub-assignment or subletting the work and how you distinguish between the auditor's expert and management experts. I just want to have a clarity on that. So first let's talk about SA 620. SA 620 talks about using the work of auditor's expert and management expert. Now there are two things. As far as auditor's expert is concerned, that is your discretion to appoint an additional expert who will help you to understand certain technicalities related to a transaction or related to a particular entity and give your opinion, and based on his opinion, you can form your views, when you are expressing the views in your audit report. Let me give a simple example of an auditor expert. Suppose, there is a big listed company is there and there is an actuarial valuation which is carried out by say insurance company. But somehow you don't want to believe that insurance company's statement which is given to you. So you appoint your own actuary. The data is given by the company, you pass on the data to your actuary who is appointed by you and he is acting on your behalf. Now when you appoint that auditor's expert, He will give you the opinion to you that what will be the actuarial liability for gratuity, leave encashment, and any benefits, retirement benefits which are there, and you rely on that. So such appointments are auditor's expert. Vice versa, if similarly a actuary is appointed by the management, that is by the auditee, he is called as a management expert. Now there are certain restrictions on whom you can appoint as auditor expert and where you can appoint as auditor expert. So in the field of accounting, you are not supposed to appoint an auditor's expert because you are supposed to be the expert in that. So you cannot appoint someone to give your opinion about how an accounting entry should be passed. Now what is the exception to that? Suppose you are dealing with, say, a financial institution wherein complex instruments are there, investment instruments are there, which you are not aware about or which are very complex. You can appoint a valuer or you can appoint a technical expert to make you understand as to how to do the valuation. So it is not related to accounting. But accounting and auditing are two things wherein you cannot appoint an auditor's expert. So always remember that. Now where you can appoint? Suppose there is an interpretation of law which is required. Interpretation of a regulatory circular is required, you can appoint an auditor's expert. So for example, if you are doing a bank audit, there is a RBI circular which is issued and you are not certain about interpretation of that. You can take the help of auditor's expert. You can appoint another CA, take his opinion, based on that you can form the opinion. That is perfectly allowed. But as far as say how the CBS accounting entries will be passed, for that you cannot have an auditor's expert because you are supposed to be expert in the accounting. So that is the only restriction. Second restriction, that auditor expert should not be related to that auditee entity in any capacity because otherwise his independence will be lost. So all the test of independence which you carry out for yourself should apply to the auditor's expert. Otherwise he can never be called as auditor's expert. He can merely a person who is expressing an opinion and not really the one on whom you can rely as a expert. Now as far as management expert is concerned, anyone can be appointed as a management expert. The reason being you can't have any control over the management expert. So only one thing which you need to ensure that no one can become management expert also and auditor's expert also on the same topic. For example, suppose there is an advocate who is appointed by auditee, he is giving some opinion about a particular civil case which is going on. Now you cannot appoint the same lawyer to assess that what will be the impact or what is probable loss which is arising out of that particular case because he is a related party to that particular client. So independence has to be there. Second thing is that as far as the auditor expert is concerned, you need to define as to whether you want to disclose those details in your audit report or not. This is not a mandatory requirement. But at times you might have to disclose that. For example, as I said, actuarial valuation. Suppose there is a material misstatement, in actuarial liability. Company is saying that it is 50 crores, you are actually saying that it is 80 crores. 30 crores is a huge gap. You might need to mention that you have taken the help of auditor's expert and that's why the 30 crores difference is there. Now that discretion is available with you. There is no mandatory part about that. So you don't have to mandatorily specify that you have taken the help of auditor's expert. Now let me go a little step further. Suppose you are subletting your work, that subletting under no circumstances comes under auditor's expert work. So for example, you are appointed as a bank branch auditor, you are taking help of another CA firm, that help can never be called as auditor's expert. Because you are doing or subletting a work, subletting work is not auditor's expert work. How to tackle that is a different story. But I just wanted to clarify that subletting part can never be called as auditor expert. Auditor expert means he gives you opinion. You refer a matter, he gives you opinion, the assignment gets over. He cannot work along with you, in auditing environment or in accounting environment. So always keep these things in mind. Always see the appointment letter which many a times prohibits subletting. That will never prohibit auditor's expert. But ask yourself whether, someone who is working with you, whether you can call him as auditor's expert or not. That is something which is beyond this particular standard. Next one is SA610. SA610 is about using the work of internal auditor. Now few things to clarify. When you talk about the internal auditor, it includes the external internal auditor and also the internal audit department of that particular entity. It includes both. Now when you are using the work of internal auditor, again certain tests you need to check out. First thing is that whether that internal auditor, which includes internal as well as external, whether he is professionally and technically competent or not. Second thing is that whenever you rely on that work, that reliance on that work is limited only to the extent of reference to that work. Your liability about expressing the opinion can never be diluted. He is not your branch auditor. He is only an internal auditor who is from the management side. So whether it is an external CA firm or whether it is an internal audit department, there is no reliance on the work. It is only using work of internal auditor. What it really means, the outcome of internal audit can be used by you, as a evidence also. But you cannot, dispense of certain things because the internal auditor has carried out. Now, what is the way out? Many a times you can carry out certain work jointly with the internal auditor, and there some degree of reliance can be placed. For example, suppose there is a stock audit. You can have, say, two persons from internal audit department, or say internal auditor, 2 persons from your side. There is a joint exercise which is carried out. There is no reliance per se, it's a joint effort, which is perfectly possible because it is carried out in front of you. But suppose, you have, say, concurrent auditors and internal auditors at the branches, and based on that, you are concluding that, say verification of advances in terms of bank audits, or say NPA statement, you are going to rely on that. That is specifically disallowed. It is specifically prohibited. So using the work is the word which is used, and not relying, on internal audit is the word which is used. There is a huge difference in that. Now, what is SA 600? It is exactly about reliance on the other auditor's work. Now, when we talk about SA 600, what it talks about is, whenever there are component auditors are there who are appointed, there are two ways to rely on that. One is that whatever is the audit report which they are issuing. So that is a natural way. Say branch auditor is there, he will issue a report on that branch audit. Suppose it is a subsidiary entity, he will issue a report on subsidiary entity. Suppose it is a component, he will issue a component auditor report. Now, in addition to that, as a holding company auditor or as a consulting auditor, you can ask certain additional confirmations from that particular person. So the person has to give you a confirmation, and based on that you can rely on him. But at the same time, the confirmation will be always confined to that particular unit only and not related to consultation process. So just to give an example, suppose say there is a holding and subsidiary entity. Subsidiary entity, normal report is issued, statutory audit report is issued, CARO is also issued, everything issued. In addition to that, you want certain processes to be carried out by that subsidiary auditor, and you want a confirmation of that. You can ask for that confirmation, you can rely on that also, because he is equally competent as you are. And based on that, you can form a view. But at the same time, you need to ensure that you are not subletting any part to him. Just to give an example, suppose there is a, intercompany transactions are there, holding and subsidiary transactions are there, you can ask the subsidiary auditor to give the list of such transactions which are carried out with the holding company as a counterparty and certified. That is additional procedure. You can take the certification, rely on that, and counter check can be done by you also, because you are at the holding company level. These additional information can also be relied by you, report can also be relied by you, and you will be never held responsible for that. That is as far as today's scenario is concerned. But be on a lookout about how SA 600 will evolve in future. There are certain things which are likely to be changed in coming days. The process is already on. None of us really know about what is the final outcome is going to be, because in the entire scenario of branch audit, consolidating audit, holding and subsidiary entity auditors is going to undergo change. So let's wait for that final verdict. So I just thought to cover this SA 620, 610 and 600 in nutshell, just to, as a matter of squeezing them actually, means really sorry for that. But I just thought that these three standards are something which we use many a times, but we tend to forget about its usage. But last but not the least, whenever you are talking about standards on auditing, keep on referring to that SA 200 again and again for the simple reason, because it is the starting point for any standard. So whenever you are reading, say, a particular standard, let's say SA 600 or say SA 610, 620 or any standard, just refer to the paragraph related to that standard which is there in SA 200 and then read that standard. So it becomes a comparatively useful exercise. And before I conclude, just one last thing which I just wanted to add. Gradually the AI is coming into the areas of audit, and there is a lot of buzzword about how AI will affect the audit profession. Just I thought that I will express my views. AI will never replace the auditor per se. It's more like an open book exam, wherein the reference material can be quickly available to you, but you need to know that where to see and what to see. And then only you can use AI. Don't rely AI on in a blind way. Your professional skepticism has to be always alive, not to rely on something which is readily available with you. Apply your mind, and then only the things will be simpler. So thanks to all of you for patiently hearing me, and sorry if I have skipped certain slides, but I just thought that whatever I can deliver in the devoted time, I will just deliver. Thank you very much. Thanks.
So thank you, Mr. Gokhale, for excellent presentation. Thank you very much. I invite my Ankush